What is up, everyone, and welcome back to another episode of WagMe TV. We're here today to cover the single biggest crypto event of the year, and that is the Ethereum Merge. We're super excited to get after it today. We're excited to cover a bunch of stuff that we believe is being overlooked about the Merge. And as always, I'm joined by the absolute homies, starting off with the Doctor, Doc Mata, the All-American, Ev Smith, and the NFT Lord himself, Alex Garcia. So to get it kind of going, Armada has put together a lot of great background information to give us a little bit of a refresher on where we're at with the ETH merge, and then we're super excited to kind of get into some overlooked topics today.
Yeah, so let's go ahead and dive right in here. We have a little slideshow here. We'll actually post it in the video as well down in the description so you can check it out. So just some quick context. I thought this was a really good slide to kind of overview this. So as kind of an overview, it's a big milestone for the original ETH roadmap, right? It's essentially our transition from a proof of work system secured by miners who purchase and run hardware, right, really to this proof of stake system, which is more secured by validators that stake that ETH in order to validate the chain. So there's a couple really great things, right, that are going to come from it. A reduction in ETH issuance, right? So after the merge, proof of work will cease to exist, which will dramatically reduce that issuance, which we'll get into it a little bit later. We're going to be a little bit more energy efficient, more secure. And when I say a little bit more energy efficient, the power consumption is actually going to be cut by about 99% is the prediction.
We mean a lot.
Yeah, we mean a lot, which, again, we'll get into all this later. The last piece being decentralization is kind of the biggest piece here. And really, they're laying the groundwork to become more scalable as time goes on. And so what we start with, right, is the beacon chain. That was executed back in December of 2020. As it says here on the slide, that's when they created this separate parallel proof of stake chain so they could test essentially that without impacting the proof of work network. That's when staking began. We had the assistance in validating the new network, right, which we all knew is ETH 2.0. And then what we have now is essentially the merge, where we're going to merge the user state of the ETH network with this new beacon chain. As you can see by this little diagram here, we're going to have this piece that's going to switch fully over to proof of stake. And then later in 2022, 23, we're going to hopefully see the data sharding piece. So really, really quick overview for us. Anything else that you all would add?
Yeah, I mean, this is that event that we've all been talking about. It's been building up for quite a while now. I know over the last few months we've been nervous to hear, hey, maybe this is coming in the fall. You know, maybe this might be September, and it's been official. In the last month here, they've officially said September 15th and 16th, right around that area, we're going to see the switch over from proof of work to proof of stake. So super exciting stuff, something the Ethereum community, the whole crypto community has been waiting for. So excited to dive into it.
And you also kind of think about the rally that we've been seeing, leading up to this, where, we were down in I think we almost went sub 1,000 there for a little bit in June. And since then, obviously some of the macro stuff kind of leading the way, a lot of risk on behavior happening in the broader market, but it can't be ignored that, the merge is coming, and we're seeing that in the price action as well.
Absolutely. Let's actually pop in here before we kind of get into the price action, some of the bullish indicators, everything like that. Let's actually pop into some of the misconceptions that are just kind of around the merge that we've been hearing. So here's some of the biggest ones, right? It's really not going to solve all of ETH's problems. As I said, it's really just laying the groundwork kind of for scalability and for some of these upgrades here as you move forward. So the first point, we are not really improving scalability with this transition over to proof of stake, right? I think some of the big things are that it doesn't decrease transaction fees, right? Which is a big issue, and it's something that's been a really big problem with Ethereum, and why a lot of these other L1s are also starting to take some of that market share. And so that's something that's going to come down the road for them. But it's not something that's going to happen with this upgrade specifically. Anything that you all wanted to add for those first two?
No,
Yeah.
I think.
Yeah,
Oh,
go for it.
everyone has something to add of the first two. No. I think that's so important to understand, because I think one of the most, and I've seen this circulate like on Twitter and like even in articles too, where it's like you should know better than what you're saying. But
Yeah.
I think a lot of people, why it's been so bullish, to Zoe's point of how we've kind of accelerated from like 1,000 basically to $2,000 kind of being our marker for where Ethereum's sitting around. I think a lot of people are expecting that day one, when the merge goes through, like all the gas fees are just going to be negated, which is just not the case. And so I think that there's actually a lot of back end risk after the merge, when people actually, like, reality starts to set in and they're like, oh, this is not what I thought. And then we actually might even see a decrease in terms of the volume of people actually buying and doubling down on Ethereum. But that's kind of my take.
Yeah, I was gonna say pretty much the exact same thing. Where it's if you're to take one thing away from this video, hopefully you take more than that. But one crucial thing is, like, please do not expect gas fees to go down materially after this merge happens, right? This is, as our motto is alluding to, setting the stage for sharding, and that will be, when we get there, which is, timeline is quoted at 2023. When we get there, that's when we should see a material decrease in transaction fees, because the transactions per second at that point would go up. So, yeah.
Yeah, I feel like that's the biggest misconception I've been seeing out there. What was that, Ev?
Well, I was just going to say, just diving into that a little more, the reason behind this is, the ETH2, the proof of stake, is coming in at the consensus layer. This is something where it's creating consensus across all the different validators in the system, whereas, the gas comes in at execution. So it's actually a different place in the order of operations that takes place to have a transaction on the Ethereum network, be added to the blockchain. So because it's in a different order, that's why you're not seeing the scalability. Like Soham hinted to, that sharding that's going to be coming up, that's going to be in that execution, and that's really what you're going to see where the gas price will decrease.
Yeah, definitely. I'm going to skip around really quickly here. And so this is another one that I've seen. The chain does not have to stop. That's actually why they've been doing it the way they've been doing it. And so if I actually go back here, right, as you can see, the reason they've been doing this along the way was so that they didn't have to stop. And so the idea is we're just going to pop in here. We're going to separate the proof of work chain from the execution chain, right? And now you're going to have two nodes, like Evan was just mentioning, right? Your execution and your consensus node. So I think that's another big one that I've been seeing pretty often, is people saying that it does have to stop. One thing for a lot of the listeners, I'm sure especially if you're watching an ETH video and wondering about the merge, we have the September date coming up. Probably some of you have invested in what is called ETH 2.0, right? So there's not going to be another ETH token, but ETH 2.0 is essentially what was utilized to stake and help validate this chain, so that they could make sure that they were testing well and make sure that this was going to be a smooth transition for them over to proof of stake. So once the upgrade is actually pushed out, users won't be able to completely withdraw all of their ETH 2.0 at that point all at once, right? There's a limit on the exit rate of validators to ensure it's not too rapid. And so we shouldn't see a massive dump of ETH come merge time from that specifically. And so that's something that I definitely wanted to highlight, because that's something that I've been seeing move around the Twitter sphere a lot. So that is something that they're definitely accounting for. Now, that does not mean that it isn't, as we were kind of alluding to, like a buy the rumor, sell the news sort of situation. But from that specific grounds, that's not where a lot of the dumping is going to be happening from. Anything else on the misconception, fellas, before we hop into some of the bullish implications?
I guess this might be a question for Garcia, but as ETH 2.0 comes out and we're able to buy and sell very easily, what happens to ST ETH? Is that something that still stays relevant, or does maybe it lose some relevance once the merge has been complete?
Yeah, so and Mata might be able to add some clarity to this, but my understanding is that once the merge is complete, it's no longer like ETH 2.0 that you can purchase. Like that is literally the Ethereum token that now you can buy and sell. And so from my standpoint, I thought STETH was basically going to be, not necessarily as relevant. That's my understanding. And I think that people can actually, once the merge is complete, you can take that ETH 2.0 that you've had locked up and actually trade that if you want. And that basically becomes Ethereum. So that's my understanding of it. I don't know what happens to Lido, though. And a lot of those, DeFi protocols that were relying on STETH, I'm not totally sure what happens to them, but my understanding is that ETH 2.0 turns into Ethereum essentially.
Yeah, right. And that's kind of what I was alluding to with they're not going to be able to just completely withdraw and dump all of their ETH 2.0 or all of their STETH once that merge does happen. But there will kind of be little periods of time where they can release some of that so that they make sure that they still have the validators on the chain there. So great question. And I'm not sure, like to your point, Garcia, what that would do for Lido or some of these other, institutions or organizations that are working with it. I don't know. So would you know that?
So one very, very important thing, and I actually just learned this pretty recently over the last couple months or so, is it's not like right when the merge goes through, you're going to be able to redeem your STETH for Ethereum. It actually, there's a month's log lag factor there, where it's like between 6 and 9 months, something like that. I forget how much, but it's not like there's gonna that's one of the interesting things about it too, right? Like something that could raise a little bit of eyebrows. Like I don't know if a lot of people even know that. Like it's not like immediately when the merge goes through, you're gonna be able to redeem your Ethereum, right? That was like kind of the premise of what a lot of people were assuming. It's actually still gonna be like kind of this delayed factor. So something to take note of there.
Yeah, that's really cool. I think that's a really good point, especially on implications of the merge, because to your point, I think a lot of people will just think, okay, cool, once it goes through, everything's set, I can liquidate, and we know what happens when people freak out about their ability to liquidate. Usually that ends up in depreciation of crypto assets. So I think that's another potential case for seeing Ethereum kind of do a little bit of a pullback after the merge once reality kind of sets in for that, especially because, I mean, Lido is popular, right? And a lot of these other DeFi protocols are pretty popular. So it's a really good point, Zoe.
Popping through here, some of the bullish implications. Evan, I don't know. Did you want to run through these for the team?
Yeah, no, I can definitely take this first one. ESG. I mean, it's something that we hear all the time. It's about sustainability. It's about creating a lower carbon footprint and being energy efficient. And this is what this step for the Ethereum blockchain and network. This is what people are most excited about. It's taking the amount of energy that is used by the previous proof of work layer to proof of stake, where you're no longer having these super energy intensive computers create and validate different blockchain blocks. And so it's going to be super less intensive. And, why is this important? Well, there's a lot of different companies and corporations that are sitting on the sidelines here that want to be able to take part in the crypto wave. There's use cases out there for companies that just haven't been able to be realized for many different reasons, but one of them is their ESG score. And companies now can come in and not have to take a huge hit to their ESG score because Ethereum is now very energy efficient, or comparably very energy efficient to what the proof of work layer had.
Yeah, I mean, whether you agree with it or not, it's a very big deal for a lot of these institutions, and it allows them in a way to kind of sidestep some of the regulations that and some of the, I guess, FUD, if you will, in a way that's kind of slung at things like Bitcoin and Ethereum right now. So it does give a little bit more of a distinction as well, especially from the institutional perspective of, all right, Bitcoin is now a proof of work chain versus Ethereum being proof of stake. So it allows them to kind of push a lot more money into that, which, what we all like to hear, pushes up the price as well. So,
and the other part of that is just the security. Like you got number two here. I mean, it's something for companies to see this lower carbon footprint and that's awesome for them. But at the end of the day, their whole customers rely on their trust, and this security is, priority number one for them. Improving security only brings more people into the space, only promotes better practices. So it's awesome to see as number two, Mata. I'm sure you've got some more points around that.
Yeah, I mean, just in general as well for the chain, I think it's obviously great for institutions like we're mentioning, right? Both of these first two pieces, but it's also just going to be a little bit harder to attack the network. The idea is it's going to be more decentralized, right, as we move forward. And we'll also, like we see with a lot of these other proof of stake chains, you'll have the power to slash attackers and things like that as well as we move forward. So a little bit more, I guess, control from the community when it comes to the security as well.
Do you guys think, this is just a broad question, like, do you guys think because right now with proof of work, right, there's like, back when Ethereum was nothing and like no one was using it and crypto wasn't popular and stuff like that, like you could, in theory, like the barrier to entry to become a miner was like pretty low. Nowadays, the barrier to become a miner is like pretty high. Do you think that or at least relatively compared to then, do you think the move from proof of work to proof of stake will make validating, mining and validating and just generally, I guess, staking is a lot more accessible to like a lot more people? So in theory, the network could become even more decentralized, inherently then like helping the security. Do you think that's like a piece of it too?
Yeah, I think
100%.
that's a big piece of the security, right? So it's no longer just like I was mentioning, miners or institutions or people with large money that are in here trying to validate the network using the proof of work system, right? You have ETH enthusiasts, you have normal individuals who can start to secure that chain by staking their ETH as well. So I definitely think so. But there is something to be said, and we'll get into this in some of the bearish implications as well, is what's a little bit difficult to kind of come to terms with some of these proof of stake chains is now it can, in a way, the idea is let's make this more decentralized. But if you have these massive individuals, these whales putting in tons of money, they then have a little bit more power when it comes to the governance of the chain and slashing those individuals, like I was mentioning, and all those things. So in a way, it could become a little bit less decentralized by them trying to become more decentralized, if that makes sense.
So I guess this is a question for you, but previously with Ethereum, there was no incentives to hold your Ethereum on the sidelines other than the potential chance that Ethereum went up. Now you have people, now people are able to make money on their Ethereum by staking it in the network. Do you think that's going to incentivize holders to use it less and less? And would that be a potential reason to drive scarcity like upwards? Or how do you think that new incentive in the network might change how a normal person in the Ethereum network would act?
Yeah, you're saying basically like because more and more people would be incentivized just to stake their ETH,
right,
and essentially like remove it from the circulating, not necessarily removing it from the circulating supply, but all but remove it from the circulating supply, right? Like they're not going to be doing anything with it.
And it's not new,
yeah.
Other cryptos do it, but yeah,
for sure.
We're going to see less on exchanges overall,
Right.
I think, on Ethereum, but keep going, Zoe.
No, yeah, I completely agree with that too. I think there's going to be less in terms of circulating supply. You also take that and, we kind of extrapolate the energy efficiency and ESG gains that we're going to see and take it down into that third bullet of deflationary potentially, right? And so basically because it takes less energy for the blockchain to be validated, there requires less, issuance of new Ethereum to reward those validators, right? And so that's where you kind of see like a combination of staking becoming really popular and the fact that issuance will most probably be going down significantly with the move to proof of stake. Those two things combined could create like a very deflationary dynamic in terms of like the circulating supply of Ethereum, I think.
That's a great point.
Absolutely.
And that brings us to the kind of side the divot from deflationary, right? I mean, we always talk about sound money with Bitcoin, right? It's that fixed supply that you're working with. What they're really shooting for here is what they call ultrasound money. So they are hoping that it does become deflationary over time. And obviously, there's going to be equilibriums that are established at different levels, and they change over time based on how much is on exchanges, how much is circulated, like we're all talking about. But the idea is to hopefully that becomes ultrasound money and it's actually deflationary, which would be kind of a nice breather from what we've seen lately, just in general with fiat currencies. And I feel like most cryptos in the space. So I thought that was another good thing to call out from a bullish perspective.
Absolutely.
The last two are kind of just more general. So you're going to have that step towards sharding and hopefully lower gas fees down the line, right? Like as we mentioned, it's a misconception that it's going to solve all their issues when they have this merge completed, but it will be a step towards all of those upgrades and updates that are coming down the line. And I think another piece is just the reallocation of dev time that's bullish for Ethereum in general, right? You're going to have developers who've been working on this merge effortlessly, like all the time, right? They're going to be able to start to work in other areas, such as those sharding pieces that'll move us towards some of those upgrades moving forward. So on to the bearish implications, what we all like to hear, right? So some of these are in line with the misconceptions, right? This will not fix all their issues. One of the biggest issues being the large gas fees. One thing that we talk about a lot on this show on WAGMI TV is just the broader macro environment, right? So it's not great right now. We've seen a pretty good bump as of late, but in general, right, inflation's high. There's a geopolitical conflict. The list goes on, right? There's a lot of gray clouds coming, and it doesn't seem like they're going to go away anytime soon. So something to keep an eye on when we're talking about not just Ethereum, but honestly the crypto space as a whole. Anything you all want to add to those pieces?
Yeah, I mean, just kind of taking a first glance at these and thinking through them, you know, large gas fees have always been in the system. The past year, we saw outrageous gas fees and still heavy traffic. I know it's a very different environment, but you could still see where Ethereum would be successful there. Yeah, I think the biggest issue that I would be nervous about, and you know, one that we don't have on here is, you know, Ethereum starts to lose their market share if their security it becomes less secure, and then also if their transactions per second start to slow down. If either of those two things were to happen, you see other cryptos coming in and being able to take market share. That's only going to be stuff that we see like once this rollout comes through. But for the most part, just with how long this update has been built out, how much traction it's gotten, how many eyes people have seen on it, it's tough to think that it's going to fail or going to flop. You know, it's just like a different level of quality that the Ethereum community puts together. So I totally agree with all these bearish implications, and we can run through them. But man, it's tough to think that it's going to flop.
Ev, I'm going to need you to knock on some wood right
I
now.
know.
Yeah,
I know.
knock
I
on
gotcha,
someone
I
for our
gotcha.
bags, bro. Jeez. Oh man. My main concern, like from an investing standpoint, and then Mott, I'll toss it back to you, but like my biggest concern, like we talk about this all the time on this channel, is expectations, right? CPI expectations, core inflation expectations. If investors' expectations is that 3 of these, 6 or 7 are going to be solved at the end of this merge, and they don't see that, once that happens, I think we're going to see some pretty brutal realizations in terms of people liquidating Ethereum. So my main concern is there's way too many investors going in with the expectation that this is the end all be all. Now Ethereum is basically Solana except secure. It's no, it's not necessarily at that level. We have the foundation for that. But if that's your expectation, and if that's a lot of investors' expectations, which it could be, then we're going to see some serious price action off the back end of this once reality starts to set in of what the merge actually means. So I think that's kind of where my head's at.
Yeah, I mean, I think that's an incredible point, right? I think a lot of these kind of link together, right? Specifically, the one I'm looking at is other L1s starting to lure frustrated ETH users, right? Especially if a lot of people are looking at these misconceptions and actually thinking that that's going to happen, right? If they think it's going to fix all the issues, if they think it's going to, take down the large gas fees, and then it doesn't, right? What's to stop them from going to a Solana or an Avalanche or Cardano, et cetera, right? I think that's something that definitely has to be called out. And honestly, part of the reason why we're doing this video as well, right? Because we've seen these misconceptions flying around, and we all have a bag in it. People watching it probably have a bag in it. Let's spread this around for sure. Anything else on this slide, fellas?
I think we're good. I think we got a good shot at having a successful launch, but I'll knock on wood.
Perfect. You gotta cover both sides. That's the key.
Right.
The very last one, super short for us. Just some of the risks, right? Obviously, none of this is financial advice. We don't have a crystal ball. We can't predict the future. Invest in all these things at your own risk, but hopefully you know some of these things. A lot of the risks that are coming from this merge are things that we're already aware of from proof of stake chains as a whole. So definitely look into that. What's happened with some of these L1s over the course of the last year or two. A big one with Solana's the denial of service attack. So definitely look into that and how it's kind of halted the chain at some points. And then the last one being kind of what I had mentioned before, right? Centralization with some of these staking pools. So the goal with all of this, right, is decentralization. And I love the idea of it. It's just tough to think that there won't be whales and institutions that can take over a big share of Ethereum and be able to kind of make some of these decisions moving forward. So any thoughts on kind of that third point, y'all?
Yeah, it's almost like the, Jack Dorsey point, when he got into a little bit of a Twitter battle. I think this was a little bit ago, but you guys probably saw that. I think he got into a Twitter battle with like Mark Andreessen or something. But basically saying that like, no matter how decentralized you want to make something, there's going to be massive players that just basically control it, right? Mm-hmm. And so like the decentralization is essentially just a ploy to make you think that you like have some sort of control when you really don't. Yeah, I haven't really made up my mind on it yet, but it seems like a pretty plausible like place to be coming from. Seems pretty reasonable. Like it, just as you were saying, it's hard to imagine like big players not kind of having an outsized advantage. But that doesn't mean that little guys like us can't take advantage of it too. So, my 2 cents at least.
Yeah, totally agree. I think it's all a spectrum. It's the idea that you could have more control in some space than in another space that you had your money in. I totally agree. I think that's a great point. It's just going to be the question of, does it continue to provide more and more power and more financial freedom to the individual that's in the network? That's what we're all here for. That's what the main goal of this is, at the end of the day. And so if it's a step towards that, that's awesome. And they'll continue to work. I really think that, it's going to have a great chance of, once we have the merge complete, sharding finished up, you're going to see high transactions per second. You're going to see gas fees go down. You're going to see people able to move their money faster. And hopefully at the end of the day, we're able to provide better price stability and, have more utility across the network. So I think it's tough to see right now sometimes because we are so early to see how this would actually help you in your day-to-day. But I think there's points there where it will be helpful in the future.
Yeah, I mean, if it's all about what drives ETH to a higher price, it's eventually going to be what gets the institutions to come in and say, you know what, we can just use this like as our way to send funds, as our way to interact with payment systems, right? So I think ESG is huge. Like I think that, we talked about it, but it easily gets overlooked. Like Tesla, like an Elon, like that's what they focus on. That's how they get their tax breaks, like up to billions of dollars is basically from their ESG scores. And so I think a lot of the times, if you're thinking about what's going to take Ethereum to that next level, it's going to be institutional adoption. So we need scalability, security, and obviously, that kind of friendliness towards the environment. So I think, if you want to break it down that way, I think it's really going to be what gets institutions in, and we have to have the merge happen to have that follow through.
100%. I love that. That was a great way, I think, to kind of cap it off here, unless anybody's got anything else. Awesome. Well, hopefully to the listeners, hopefully you guys enjoyed. We really tried to dive into today a lot of the stuff around the merge that we weren't seeing covered, as much as we would have liked. Trying to, give all you listeners just some more alpha to go about your daily lives with. So if you found any of this useful or funny or helpful in any way, make sure to smash that like button down below, smash the subscribe button, and leave us a comment. Let us know what you think about the Ethereum merge. Would love to hear if we missed anything or, just your general thoughts. So thanks again, folks. And we'll see you next week. Wag me.
Wag me.